Sydney house prices just hit 1.6 million for the first time in history.
In a sure sign that Sydney's real estate market has hit yet another record high, hitting a new milestone of $1.6 million.
And if you're looking at the market there right now, you're probably thinking you've missed the boat. I'm Angela Flannery from Palise Property, and after helping over 200 plus clients build their property portfolio, I can tell you there are still massive opportunities in the Australian market. Not in the places you'd expect though. In this video, I'm sharing 5 locations to set to outperform in 2025 based on population growth data, current infrastructure projects, employment opportunities, and most importantly, affordability compared to capital cities. Let's jump straight in. First on my list is Greater Geelong, Victoria. Currently, if you're looking to buy, you've actually got decent negotiation power. Properties are sitting on the market for about 60 days, and there are about 4.7 months worth of homes for sale. So basically, it's a buyer's market right now. If you look at property prices, they have been trending down for a bit, which might seem concerning at first glance, but all the fundamental factors that drive strong property markets are lining up nicely. First, the population growth is booming. Geelong's growing at 2%, which matches what we saw during their last property boom. People are moving there both from other parts of Australia and from overseas. Being Victoria's second largest city and having Avalon Airport nearby makes it really attractive. The job market is super solid too. The unemployment rate is sitting at a healthy 3.9%, and there are twice as many job vacancies as there were before COVID. That means that local economy is thriving, and even if the property market hasn't caught up yet. If you look at the rental market, vacancy rates are pretty low, which means rentals are hard to find. This means that rent is being pushed up consistently, and the rental yield has jumped from 3.3 to 3.7%. In terms of long-term growth potential, if you look at the last decade, Geelong has actually outperformed a few capital cities with 90% growth. And even though the last 5 years have seen slower growth, this is a good indication that there is room for another growth phase. And if you're looking at housing supply, they're building at about 3% of current stock, which sounds high, but it's actually quite normal for Geelong. In fact, their last 2 property booms happened with similar building levels, so it's not likely to be a problem. You'll need some patience though. The next 6 to 12 months might still be a bit slow as the market finds its feet. But looking at the next 3 to 5 years, all these factors, the population growth, strong economy, rising rents, and relatively affordable prices suggest Geelong is setting up for its next growth phase. If you're thinking long-term, getting in while the prices are softer before everybody catches on could be a smart move. Next on my list is the Sunshine Coast. With Geelong, the Sunshine Coast has a population growth of 2.6%, which is higher than the national average. The job market is looking solid too. The unemployment rate is currently sitting at 3.6%, and there are nearly twice as many job vacancies as there were before COVID. That's usually a good sign for property investors because it means people have stable incomes to pay rent or buy homes. Speaking of the property market, things are starting to look up. Houses are selling faster than they were, and there aren't too many properties sitting around on the market. They've got about 3.4 months worth of stock, which is pretty balanced. The rental market is tight too, with only 1% of properties vacant. The rents went up by 5.7% last year. But there are a few things to think about before jumping in. The rental returns are a little bit lower than you'd get in other regional cities, at about 3.5%. With interest rates the way they are, it might be tough to be positive cash flow from day one. Another consideration is that the Sunshine Coast has already seen quite a lot of growth over the last decade, at 137% and 76% in just 5 years. But that's not to say it won't continue to experience growth. With its beautiful beaches, ongoing infrastructure development, and growing health and tech industry hubs, the Sunshine Coast will always have a desirable lifestyle appeal. Hotspot number 3 is Ballarat in Victoria. Ballarat offers a competitive alternative to Melbourne, with more affordable entry prices and a strong rental demand. The current median house price sits at about $555,000, with the market showing quite a few signs of stability after a period of no growth. Again, like Geelong, the market currently favours the buyer, with over 1,100 three-bedroom plus houses available for sale in the region. This abundance of choice has given the buyers a lot of negotiation power. And despite current market softness, Ballarat's future looks promising. The region is expecting to see properties price increases of 38 to 51% across all suburbs over the next 5 years. This growth potential is supported by steady population growth of nearly 2% annually, with potential for even greater expansion. And vacancy rates continue to be relatively low at 1.9%, well below the healthy benchmark of 3%, which indicates a strong rental demand. On top of that, rental yields are at about 3.7% as of June 2024, outperforming Melbourne Metro. Lastly, with about $700 million worth of new projects underway, including significant infrastructure developments, the area's livability and job market are all set to improve. So for those considering entering the market, now's the time. The market is expected to strengthen when interest rates begin to decline, which could trigger increased buyer activity for those currently waiting on the sidelines. Number 4 is one you might not have expected to see on the list, but it's Central Coast in New South Wales. There's definitely some solid potential here for long-term investors who play their cards right. The market's expected to keep growing at a steady 2 to 5% clip into 2025, especially once the interest rates start coming down. What's really catching people's attention is the strong foundation in the market up there. You've got vacancy rates sitting at a tiny 1.5%, a growing population, and a healthy job market with 3% unemployment. Plus, there's not much new housing being built, which typically helps keep property values stable. Now, there are a few caveats to consider. The market's gotten a bit pricey, with Gosford and Wyong being pretty heavily overvalued. So you might want to avoid those areas and try and find pockets where the property isn't overvalued. Remember, there are pockets of opportunity everywhere. Things have also naturally slowed down a bit in growth development after a record 130% growth over the last decade. But the infrastructure developments are really starting to change the game. The North Connects tunnel has made getting to Sydney way easier, and more improvements are happening all the time. And what comes after a period of slow growth? A boom. So if you can afford it, I'd definitely start looking into the Central Coast. And last but not least, I have the Moreton Bay region in Queensland. The standout factor is the North Harbour Marina Precinct development, which is bringing a $2.7 billion boost to the local economy, which is creating over 6,500 new jobs. This project alone will generate $882 million annually for Queensland, with most of the money flowing directly into the Moreton Bay region. The local infrastructure development is looking solid too, with council committing $88.5 million to road and transport networks, plus a substantial $277 million capital works program for 2024-2025. Healthcare is getting a major upgrade with Redcliffe Hospital's $1.1 billion expansion, and there are major road improvements happening to support the region's growth. What's even more interesting is that Moreton Bay has become Queensland's second largest investment market. Property experts are taking notice of the Greater Brisbane area, and Moreton Bay is getting plenty of attention. The upcoming 2032 Olympics is adding to the appeal, likely to drive further growth in the area. The current housing price is still relatively reasonable too, with median prices ranging from $780,000 in the northern regions to $860,000 in the southern parts. While the initial growth might be steady due to current economic conditions, the long-term outlook is promising. With all these major projects underway, steady population growth, and the Olympic factor in play, Moreton Bay is shaping up to be a solid investment opportunity. I'm excited to see how these regions play out. And if any of them stand out to you, I have left a link in our bio for a free consultation so we can see if these opportunities align with your goals. So, see you next time.